What's up guys, Ben here and welcome to Motivation to Invest. 2020 has been a crazy year and now we're entering 2021. I'm going to reveal my top 3 stocks for you guys to buy in 2021. But before we dive into that, if you're new around here, then why not join the investing family by hitting that subscribe button and turning that notification bell on. Only if you want more investing tips and exclusive stock market picks, which I'm personally investing into. Also, be sure to hit that first link in the description below for more details on the VIP membership group. This VIP membership group was launched after being heavily requested from you guys, and it offers you guys access to my buy and sell signals, so when I make my moves, you can make your moves. In addition, it gives you guys access to my 6-figure portfolio, the stocks, and the story of how I built that portfolio to where it is today. So if you wish to find out more details and all the other benefits that are included in the VIP membership, then simply click the link, it'll take you to Patreon, and on there's a video which explains everything, and you can see if it's right for you. The cost is the price of a coffee, and I personally think the amount of value you get is absolutely incredible. Membership will only be open for a limited time, as I aim to keep this as a close community so I can directly speak and contact with each and every one of you guys. In addition, feel free to check out the second link in the description if you want more details on the stock research platform I'm using in this video. So I'll be using StockCard.io. This is a simple and easy platform which I use to analyze stocks, and there'll be more on that later. But with that being said, let's dive in. So kicking things off at stock number 3 is Beyond Meat with the ticker symbol BYND. So Beyond Meat is one of the biggest brands in the plant-based meat industry. If you've not checked out their products, and you definitely should, they basically create these burgers which taste like real burgers, look like real burgers, but they're made with zero real meat. And that's an extremely powerful thing to accomplish. Now, the unique thing about Beyond Meat is they have such a strong brand, and they even have many unique partnerships with restaurant chains. For example, with KFC in Canada, they trialed Beyond Chicken, which is a chicken substitute which is actually made from plants. And then they've also done partnerships with Pizza Hut and even McDonald's. So McDonald's has recently announced a McPlant burger, and although they didn't really give much credit to Beyond Meat, it's clear that Beyond Meat and McDonald's are working very closely together. So maybe something is on the horizon. Now, Beyond Meat has been going through some tough times recently. When the restaurant lockdown came in 2020, that was a terrible time for Beyond Meat's food service industry. So Beyond Meat's food service segment sales declined 11% year over year in the third quarter, and its international food service suffered even more from decreased demand, with revenue dropping 65.1% year over year. So that's a massive decrease for Beyond Meat, and the stock took a major hit. So Beyond Meat is also facing heavy competition from legacy rivals such as Impossible Foods and even many new entrants. For example, we have Incognito, owned by Kellogg's, great name by the way, Sweet Earth, owned by Nestle, and Happy Little Plants, owned by Hormel. This competition could cause Beyond Meat's margins to be decreased. So I do see Beyond Meat as more of a long-term play, despite the short-term issues and the competition, as I believe, like many new industries, the plant-based meat industry will start to consolidate in the future, and Beyond Meat could be one of the frontrunners. So really, it is a play on the Beyond Meat brand, the Beyond Meat products, and their existing partnerships with restaurant chains. Just one major partnership with KFC or McDonald's to sell burgers to every single one of their restaurants could be massive for the company. But let's dive into the numbers right now to find out a little bit more. So here we are on StockCard.io. This is a sponsor for this video. So StockCard.io, it's a great platform I use to quickly analyze stocks. So in the search box, you can simply type in whichever stock you want to search for. So I've typed in Beyond Meat here with the ticker symbol BYND, and we've got that up right here. So as you can see here, Beyond Meat, we've got high growth potential, stable operations, calm investor sentiment. So let's look at more at the high growth, because it is a growth stock, and that is the unique selling point with this business, because unfortunately Beyond Meat is not profitable at this time, as they're reinvesting their profits for growth. So let's look at the high growth potential. So firstly, the plant-based meat industry is expected to grow by 18% a year between 2020 and 2025. So that's a massive tailwind, this industry growth behind Beyond Meat. But let's dive into the specific numbers of this business. So despite the bad quarter, the current fiscal year revenue growth estimate is 38.36%, which is amazing. And then the 3-year compounded annual growth rate has been 164%. So generally, I say a growth stock is one which is growing between 15 and 20% per year on their revenues. So this has been growing at least 40%, which is an incredible growth rate. So what about the company's balance sheet? Now, this is really important to check, especially if a company is unprofitable, because you want to know it's got a strong balance sheet, doesn't have a load of debts that it needs to repay very soon. So diving into the current ratio, which is a popular metric that I use, so that's your short-term assets to your short-term liabilities. So it's how much cash has this business got on hand to cover its short-term debts. That's those due within the next 12 months. So generally, I look for a current ratio between 1.5 and 2. In this case, they've got a current ratio of 8.46. So Beyond Meat has plenty of cash on hand to weather any storm and continue to grow. Also looking at the debt to equity ratio, that's the business's long-term debt. No long-term debt or debt is manageable when compared with the company's equity. That's according to Stockcard. Now, we can't use a price to earnings ratio to value Beyond Meat, but we can look at the price to sales ratio. So that's the share price of the company divided by the company's sales. In this case, the trailing 12 months price to sales ratio for Beyond Meat is 21.55. So that means you're effectively paying 21 times the company's current sales. Now, that is extremely high, but that's what you do expect from a growth stock with such great potential. So that's Beyond Meat. If you guys have found some value in this video so far, then feel free to give it a big thumbs up. That helps out tremendously with the YouTube AI. With that being said, let's get on to stock number 2, Teledoc, with the ticker symbol TDOC. They're a leader in telemedicine. So basically, when you want to go and see your doctor, rather than sitting in a stuffy waiting area, waiting around for ages, having to actually physically travel there, you can simply do it all virtually. To me, this is the future of healthcare and how we all should be living right now. So most of the investors who invest into this stock are doing a buy and hold strategy, which is what I would suggest. There's also a few speculative investors in there because it is a growth stock. Also, the company is unprofitable, so that does need to be taken into account as they're reinvesting all their revenues in order to grow and expand the business with acquisitions such as Livongo. We've talked about the major growth of this company, but let's look at the growth of the overall industry. So, because if a company is in a growing industry, then that can be tailwinds behind the stock. And then we've got the telemedicine sector, which is expected to grow at 15.1%. If Teledoc can just track the industry, then we can see probably over 20% growth, which I consider a growth stock, if it can just track the healthcare and the telemedicine industry. So strong operations. So revenue quarterly year-over-year growth, we're up 100%. Of course, some of that is due to the global health issue, which has accelerated the trend for digital technology. 3-year compounded annual growth rate. So 65% compound annual growth rate over the past 3 years. So even before this global health crisis, this company was growing. So here's the negative, the company is not profitable yet. However, they do have a gross profit margin, which is 63.74%, which is at least 10% higher than its industry benchmark. So that's quite interesting. So looking at the balance sheet for Stockcard, we can see the current ratio is a 6.52. So this company has plenty of cash on hand to continually grow the business, do more acquisitions, and expand the technology. And last on my list, stock number 1 is Airbnb, ticker symbol ABNB. So Airbnb is an innovative travel company which recently had an IPO. Airbnb was known for disrupting the entire hotel industry, as people could rent out their apartments and houses, and people could rent their apartments and houses for much better value, and you get much greater space than you would in a standard hotel room. Now, Airbnb did have tremendous growth in the past. However, Airbnb's growth did start to slow even before the major travel lockdown hit. To mitigate this slowing growth, Airbnb invested heavily in sales and marketing and diversified their platform to include experiences and adventure packages. Now, according to my calculations, I had a conservative 20 to 30% growth rate on Airbnb for the next 5 years. Now, that is still extremely good because generally I say a growth stock is one which is growing at least 15 to 20% per year. So 20 to 30% is still extremely good, and that's being conservative. So before the IPO, the company was valued privately by a private investment firm at around $18 billion. Then just before going public, the company was valued at around $30 billion. I personally did a deep dive valuation of the company, and I came up with a share price at between $35 and $40 per share. Due to the exuberant IPO market and all the hype in the IPO market, Airbnb IPO'd at over $100 billion.
$100 billion.
Gentlemen, silence.
Now, this valuation was over 3 times the expected valuation, which was already quite high. So the only reason I'm putting Airbnb on this list for stock to potentially buy in 2021 is if Airbnb stock pulls back. So generally over time, stock prices and fundamentals tend to converge. Thus, if Airbnb is vastly overvalued compared to the company's fundamentals, then over time, we should expect that to converge, and thus Airbnb's share price should pull back. Now, I'm not saying it will, because Airbnb's fundamentals actually might catch up to the share price, which definitely could happen due to the exuberance and all the tailwinds behind the travel market reopening in 2021. But we'll just have to wait and see what happens. I still think Airbnb is an exceptional company. I think it's an exceptional brand. I think it offers quite a unique product offering, which is beneficial not just for the property owners, but also for the guests. However, the valuation was just way too crazy for me to invest into that company. Also, statistically, investing into IPOs is never a great idea, as all the hype in the market tends to make them spike before pulling back. This is just an historic fact. Now, I will be doing some technical analysis of the stocks on this list in order to identify the correct buy points. So if you guys want to find out about that, then you need to check out the VIP membership group. So the VIP membership group, I mentioned this at the start of this video, will give you access to plenty of exclusive content in addition to my buy and sell signals. So when I make my moves, you can make your moves. So you guys will know exactly when I'm buying a stock, and also when I spot a business's fundamentals has changed and I'm selling that stock fast, you guys will be informed straight away. In addition, you guys will get access to my 6-figure portfolio, the stocks, and the story of how I built that portfolio from $20,000 to over $200,000. But that's not all. You guys will also get access to the VIP Discord chat. So this is a private messaging chat where the VIP members can all discuss different investment ideas and projects. The VIP membership is an extremely exciting place for you guys to check out. So if you want to find out more, or if you're just curious, then I've actually made a full video outlining the different tiers and packages. To be honest, to sign up, it's the price of a coffee, and the amount of value I think you get is absolutely incredible. So if you wish to check it out, feel free. There's a link in the description below. Watch the video would be my advice, and just see if it's for you. I think it's a tremendous amount of value. And if you guys found some value in this video, then feel free to give it a big thumbs up. That helps out tremendously with the YouTube AI. And if you're new around here and you still haven't subscribed yet, what are you waiting for? Go ahead and hit that subscribe button, join the investing family, and turn that notification bell on. Only if you want more investing tips and exclusive stock market picks, which I'm personally investing into. With that being said, I hope you guys have an incredible day, and I'll see you in my next video. Invest safe.